If you have not done these things yet, do them now. As we get close to the end of the year, make sure you're all set financially to end this year with a bang and start the new year with rigor. In this video, I will talk about the top 14 things to check off in your financial checklist and set yourself for financial success in the coming year. Hi there, I'm Avanti. I'm a mom, an investment analyst, and a CFA charter holder. Subscribe to my YouTube channel and follow my Facebook page to learn how to build wealth through investing. Let's see how you can set yourself up for success in the coming year. Are you ready? Number 1, check your FSA account balance. If your employer offers a flexible spending account or an FSA, check if there's a balance and check how long you have to exhaust that balance. Most FSAs have a use it or lose it policy. Some FSA accounts permit a small balance to be carried year over year. And many FSA accounts don't allow any balance to carry forward. You can use your balance to buy a variety of things, including cold and allergy medications and painkillers. Check my FSA affiliate link on Amazon in the description to learn what you can purchase if you have a balance. Even if you don't take any medications, you can choose to purchase items with no expiration dates, such as support braces, blood pressure monitors, or thermometers, etc. Next, check your taxable portfolio to see if you can harvest tax losses. Check your brokerage accounts for your holdings. If you have any positions that have generated paper losses this year and you don't think those investments fit within your investment policy, think goals and constraints, you can sell them to convert your paper loss to an actual capital loss. The loss that you generate will reduce your taxable income for this year. With a reduced taxable income, your tax burden will reduce. The end of the year is a perfect time to evaluate your portfolio for any potential to harvest tax losses. Check the IRS website for limits on how much you can apply and what portion of your loss you can carry over to the following year. Next, complete your open enrollment elections. If you receive benefits from your employer, the employer typically has a deadline for any changes you can make to your benefit plan. These changes include changes in health or dental plan elections, adding or removing a beneficiary, adding an FSA, etc. Make sure you have the correct elections during your open enrollment period. Next, check your retirement contributions. If you haven't maxed out your retirement contributions for this year, now is the chance to make it happen, especially if you have any extra funds. These contributions have tax advantages. For example, 401k contributions are pre-tax and help reduce your taxable income for the year. Roth IRA contributions are post-tax, but you don't ever have to pay taxes on any gains or withdrawals. If you want to check all your retirement options, watch this video where I discuss different retirement options to consider to reduce the amount of taxes you pay to the government. Check the most current limits on contributions on the IRS website. If you're 50 or older, you can make catch-up contributions. So try to take advantage of those if you're eligible. Next, check if you are subject to required minimum distributions. If you are 72 or older or have a beneficiary IRA, you have to take required minimum distributions or RMDs from your retirement accounts. If you don't, there will be penalties. If you have other income and don't need the RMDs, you can consider a qualified charitable distribution or a QCD. Before I continue with my end of year checklist, please give me some love by hitting that like button and share this video with one person who may get some value out of it. And if you're new here, please subscribe and hit the notification bell so you don't miss any of my latest videos. If you're watching me on Facebook, don't forget to follow my page and comment below what you like and what you want to hear more about in my future videos. And if you want to learn how to invest in the stock market, don't forget to watch this free course on the basics of stock market investing for beginners with zero financial background. Next, consider a Roth IRA conversion. This is not for everyone. A Roth conversion is the process of moving your retirement money from a non-Roth account such as a traditional IRA or 401k into a Roth account. This is not for everyone because during the conversion, you may end up owing some money in the form of taxes. There is no penalty, but the tax burden may be significant. This is great if your taxable income has gone down this year and you are expecting to be in a lower tax bracket this year, but your expectation is to be in a higher tax bracket later and in retirement. Next, check your HSA contributions for the year and to try to max them if you are enrolled in a high deductible health plan and if you have the money to do so. HSAs enable you to invest money and have triple tax benefits. Watch this video when I upload it where I will discuss HSA in detail. Next, check your 529 contributions for the year. You may want to max these before year end if your state offers tax benefits. Next, fun part. Review your spending. For the past couple of years, spending habits of people have changed considerably. The employment scenario has changed. While a lot of people are working remotely, many are unemployed. No matter what your situation is, creating a budget always helps you learn something about yourself. For example, this year during my annual budget review, I realized that I was spending a lot on travel-related expenses. If you already have a budget, now is a good time to check how you did over the year. If you didn't start the year with a budget, you can still understand how your spending was during the year. While I don't actively budget every week, I always like to review my spending for the entire year. And the reason I like to do this for the entire year is because I incur different types of expenses in different months. For example, if you travel during the summer and only look at expenses in October, for example, you will miss seeing those travel-related expenses in your review. Similarly, around the holidays, your spending on gifts may be higher than during other months of the year. You can use my budgeting worksheet linked in the description below to evaluate how much you spend in each category. I'm working on a budgeting video, which I will link here, where I discuss budgeting in detail. I like to break down expenses into three major categories: needs, wants, and savings. The general consensus is that your allocation to each of these three categories should be 50-30-20, which means your needs should make up 50% of your budget, wants 30%, and savings should be 20%. Now, one person's wants can be another person's needs. For example, if you live in the suburbs, a car may be a need. But in a city with access to public transportation, that same car will be a want. Watch my budgeting video to understand how I do this. Once you get a sense of your spending in each category, it's time to move on to the next step. The next step is to set goals for the next year. Once you review your outflows for this year, it will give you a sense of what you spend on each category and what your lifestyle looks like. If you have any major plans, such as buying a house or travel or retirement, you can put them on your list. Set goals that are higher than where you currently stand. That way you have something to aspire to. But don't set goals so unattainable that it drains you and makes you feel so demotivated that you abandon those goals entirely. Let me give you an example. Let's say your savings rate is 3% of your total income, as is the case with the average American. Just because the general consensus is to save 20% of your income, you don't have to set that goal right away. You may want to set a savings goal of, say, 8% or 10% for the next year. Going from 3% to 10% is easier than going from 3% to 20%. If you're already saving 20% and want to bump it up, go for it. In the description, I've also linked my investment plan template, and this video tells you how to use it. It lists sample goals you can set for yourself for different decades of your life. The next one is to check your debt. If you have credit card debt with high interest, start working on a plan to pay it off. High interest debt can obstruct your path to financial success, and paying it off will feel like a huge burden being lifted off your shoulders. Next, review your insurance policies. Shop around for competitive rates and benefits. Insurance companies may increase premiums each year, and just because one policy was better when you signed up for it does not mean that your current policy is the best in the market. Next, check your investment portfolios. This includes your retirement, your HSA, college savings plan, brokerage, and pretty much all assets that you currently own. Check the asset allocation and make necessary adjustments depending on your investment goals and constraints. This includes rebalancing your positions as necessary, checking for better interest rates on savings accounts, moving money into or out of your emergency fund, etc. Watch this video where I discuss the need to rebalance your portfolio. Next is to take advantage of the still kinda high interest rates on Series I bonds. The interest rate on Series I bonds has come down with inflation, but it is still quite high compared to other types of investment vehicles. Watch this video where I discuss this in detail. If you haven't exhausted the annual limit towards Series I bonds, you may be able to invest in them just before the year ends. Next, I want you to watch this video, and if you found any of this information to be of any value, please like this video and share it with one other person you want to help. And don't forget to be happy, to be kind, and to be your best self. Bye.